Felix here, and wow, semiconductor stocks just experienced their biggest rally in months as Trump signals brakes for key industries. AMD is up nearly 7%, Nvidia is pushing higher. Could this be the perfect catalyst semiconductor investors have been waiting for? Right, so listen carefully, because what I'm about to share could potentially save you thousands in lost opportunities. In the next few minutes, I'll break down exactly how Trump's evolving tariff stance is creating a unique window for semiconductor investments, particularly AMD and Nvidia, and why most retail investors are completely misreading this situation. But for those of you short on time, here is the essence. Trump's is pivoting to a more strategic approach with his tariff policy, targeting approximately 15% of trading partners rather than implementing this blanket approach that's been spooking markets. And the shift has enormous implications for the chip supply chain and could create exceptional opportunities in specific stocks if you position yourself correctly. Now, I've spent years analyzing semiconductor companies. Before anybody thought they were particularly sexy, I was tracking AMD when it was trading below $10. And what I'm seeing now reminds me exactly of patterns I witnessed before previous breakouts. But, big but, my conclusion won't be what you think. So listen carefully, don't act on the title, don't judge a book by its cover. What I learned as a banker is that there are patterns to the market that have nothing to do with the latest news. They help me make rules-based buy and sell decisions that actually work. It saved me a fortune in this sell-off just now, and it's how I got out of YOLOing into random stocks I didn't really understand, and instead I now use all the knowledge of every investor out there. You can tap into that. It's how I got to retire in my early 40s, and I want you to be able to do the same. I want to give you that rule book, but you need to promise me one thing first. Not only that you'll apply it, but that you will share it with at least one person. If you're going to do that, write share in the comments down below, and then simply head over to felixfriends.org/getfree. And what I teach you there will mean you'll never have to watch me again. Wouldn't that be nice? But look, what interests me today is understanding Trump's softening stance on tariffs and how it's creating ripple effects through the semiconductor supply chain. Winston, my trusted golden retriever, perked up this morning when I was reading the latest tariff news. He's got a sixth sense for market moving news. I promise that nose is better than any fund manager I've met yet. So what's happening and why does this matter for AMD and Nvidia specifically? Now you're going to want to grab a pen because I'll be sharing some specific price levels with you that you should be watching very, very carefully, and you need to write those down. So let's jump straight into what's happening with Trump here first. Following a cabinet meeting on Monday, Trump made some rather interesting comments that sent markets soaring. He stated that tariffs on various products will be announced in the very near future. But then later that same afternoon, he pivoted by saying, I may give a lot of countries breaks, and even added, we might be even nicer than that. Now, this is a big shift, a bigly shift even from his previous rhetoric. And what we're looking at is significantly reduced initial wave of tariffs expected on April 2nd. Very different from what analysts were expecting just a few days back. And the approach now appears to be focusing on what some in Washington are calling the dirty 15, essentially targeting about 15% of trading partners deemed to have unfair practices, rather than the sweeping approach that the market is we're on the edge about. So what's particularly noteworthy is Trump's emphasis on the word flexibility, a term that was conspicuously absent from his earlier no carve-out positions. And we're also seeing ongoing negotiations with the European Union apparatchiks, Mexico and Canada, which have led to delays in announcing retaliatory tariffs. It's a difficult word, isn't it? Retaliatory. Say that 5 times with me. Now, write this down. The market's reaction has been undeniably positive. Major indices have jumped significantly, and semiconductor stocks in particular saw some remarkable gains. AMD surged nearly 7% in that single session, which is extraordinary for a stock that size. Now, what does all of this mean specifically for chip stocks like AMD and Nvidia? Well, I've identified five 5 yes, key benefits that emerge from the softening stance here. First, we're looking at reduced global supply chain disruption. You see, semiconductor manufacturing is perhaps one of the most globally integrated industries on the planet. A single chip might cross international borders 5 or 6 times during production. Sweeping tariffs could have been, well, pretty devastating to that ecosystem. And then second, this points to lower production costs, which helps maintain those all-important profit margins of our Microsofts and Facebooks and Amazons and so on, plus, of course, Nvidia. Now, when I was analyzing chip stocks, when I was in banking, we'd often see like a 1 to 2% change in gross margin translate into a 10 to 15% change in stock prices over time. So these margins really do matter a great deal. And then number 3, yes, the third benefit is improved international business relations. Look, semiconductors are strategic assets right now. Having smoother trade relations makes it easier for companies like AMD and Nvidia to navigate all these complex partnerships with manufacturers in places like Taiwan and South Korea, for example. And then fourth, we're likely to see stronger consumer electronics demand. Lower tariffs on finished goods mean more affordable smartphones, laptops, gaming consoles, which directly drive chip demand. Slightly different chips, but still chips. And then finally, fifth, semiconductors likely won't be the primary target of whatever tariffs do materialize. Trump's comments suggest a focus on sectors like steel, pharmaceuticals, aluminium. While he did mention microchips, the strategic importance of semiconductor tech to national security makes it unlikely they'll face the harshest measures because the US, quite frankly, needs them to lead the AI race. Now, of course, there's still some uncertainties here. Trump did state that tariffs would be announced in the very near future, and his policies have been known to shift, well, somewhat rapidly, faster than, Winston getting distracted by a snack on the left. And it creates a challenging environment for corporate planning, but the trajectory is more positive compared to what we were thinking about a few weeks ago. So pay attention to this point. This potential softening creates an opportunity for semiconductor investors who are positioned correctly right now. The companies with the strongest global diversification and most advanced tech are positioned to navigate this environment most successfully. Now you have the background. Does that start to make some sense for your portfolio situation? Let me know in the comments. And then we're going to look at the specifics of which stocks should we be buying here and at what level. So let's start with AMD. Is this one of the most fascinating underdog stories in the industry? Well, let's come to a conclusion on that in a moment. And look, AMD's been absolutely beaten up for months now, sitting about 30% below its 52-week high, despite delivering pretty solid quarterly results. But here's where opportunity often hides, right? Or does it? Well, let's dive into what's actually happening with AMD first, because it's quite remarkable. Then we look at the chart and we look at whether we want to buy this or not. So first, they're mounting a serious challenge to Nvidia in the AI space. They got this upcoming MI355X series chip, which is expected to come out in the middle of this year. It's positioned as a direct competitor to Nvidia's Blackwell lineup. And it isn't just sort of corporate posturing. Oracle is committed to building a massive cluster of 30,000 of these, although not quite the sort of million cluster thing that other companies are building with Nvidia chips, but still enormous. So it signals some confidence in AMD's AI capabilities. And again, make a note of this, when major players like Oracle make commitments of this scale, it typically precedes broader market adoption. Same sort of pattern we saw with Nvidia's early data center wins before they became the juggernaut that they are today. There's also interesting chatter about AMD potentially being involved in Oracle's Stargate project, which primarily involves Nvidia GPUs. Oracle's comments about having tech advantages with faster and more economical clusters could very well apply to the AMD deployment too. So the applications here for AMD's positioning are substantial. And then on the consumer side, that's you, AMD is absolutely crushing it with 2 GPUs, the RX 97 and the 97 XT. They captured about 45% market share in Japan. Japan, I know. It's a market that's historically been very difficult to get into, and that's really telling us quite a lot, that there is just this massive demand out there, and AMD is pretty well positioned. Now, leadership. In any company, leadership is key. The CEO of AMD is called Lisa Su, and I've been looking at her leadership since about 2014, something like that, when she took over AMD, and she accomplished some truly extraordinary things in her time. She took a company that was literally on the brink of bankruptcy and transformed it into a formidable Intel competitor across lots of segments. And data center growth is starting to look pretty good. The Oracle deal I mentioned is just one example. AMD has been steadily gaining share in this high margin segment. And while AI adoption is accelerating, they're well positioned to continue with that momentum. And then also don't overlook their strategic partnerships with companies like Sony and Microsoft for gaming consoles. Those provide stable, predictable revenue streams that help fund R&D for the new AI products. So it's kind of a virtuous circle that strengthens their position. And what's perhaps most interesting about AMD is that despite their tremendous growth, they still maintain that underdog mindset, and that drives a culture of innovation. We need to do better so we can beat the big evil Nvidia out there. Now, while AMD certainly presents an interesting opportunity as the scrappy underdog, we simply cannot ignore the 800-pound gorilla in the semiconductor space, Nvidia. And we're going to look at both stock charts together in a moment to give you the real entry points. But personally, I don't understand going with AMD over Nvidia. Boom, I said it. Similar tailwinds, Nvidia is the clear GPU share leader. They're innovating faster than everybody else. They have a better software suite, and both trade at 22 times forward EBIT, which is basically profit. Both have the same valuation. So yes, AMD has come down a lot more, but considering the expected growth of Nvidia and AMD's revenue this coming year, they're both trading at the same valuation multiple. And Nvidia's profits are growing faster and estimates are zooming higher and higher. So you got to ask yourself this: why bet on the next Nvidia when you have Nvidia? Remember the next Tesla? What was there? There was NIO, that worked well for us, didn't it? There was Rivian, there was, a load of companies, Nikola, some of these companies are bankrupt right now. What about the next Amazon? Remember the next Facebook? How well has this worked out for us when there is a clear dominant market leader that's insanely profitable with insanely good execution to go, okay, I missed that one, so why don't I put my money on what could be the next thing? Typically, that hasn't worked very well. The next Nvidia is probably Nvidia. And look, sometimes the obvious choice is obvious for a reason. And despite some investors growing impatient with Nvidia's, relatively high valuations, their GTC conference demonstrates exactly why they continue to maintain such a commanding lead. And yes, the centerpiece of GTC was undoubtedly the Blackwell platform, Nvidia's next generation AI chip. But what truly separates this from previous generations isn't just raw performance, which by the way is staggeringly 40 times faster than the current Hopper architecture, but it's shift towards agentic AI. This represents a fundamental evolution from today's generative AI models. Essentially, this new wave of AI can perceive, reason, and act autonomously. And their new R1 reasoning model outperforms traditional generative AI models by just leveraging reinforcement learning and synthetic data generation, which is a very cool way to learn. It means it gets around the whole copyright issue and drastically reduces training costs at scale. And you might want to write this down. This shift to reasoning models has profound implications for NVIDIA's business model. It creates what Jensen calls a token economy, where increased demand for computational tokens drives the need for ever more powerful hardware. It's a virtual cycle that NVIDIA sits at the center of. But perhaps what's most exciting was their push into robotics, and I've got a video on robotics coming out, so to check that out, make sure you subscribe to get the notification for that. And their Groot N1, which is a generalist foundational model for humanoid robotics, the sort of things that Tesla's working on. They feature a dual system architecture for reasoning and action. And they've also partnered with DeepMind and Disney Research to develop the Newton physics engine, enabling real-time simulation for robotics training. So what NVIDIA's building here is genuinely revolutionary. They're creating an entire ecosystem for generating synthetic data to train robots in virtual environments before they ever have to encounter the physical world, which means they're not gonna accidentally kill somebody, that sort of thing, which is obviously what we want to avoid. And it's going to allow them to train much, much faster. And for their corporate customers, they've introduced something called DGX Spark. And I know we're going to get to the stock charts in a second and when to buy which stocks. And I know that's what we're here for, but this is important to understand. You can't make informed decisions without the information. So these are new AI workstations that bring supercomputer-level performance to personal and enterprise environments. So you can have a supercomputer in your living room if you like. So this isn't just an incremental improvement, it's bringing capabilities that previously required $1 million installations to the desktop level. It's a sort of quantum leap that, I don't know, what was your first computer, depending on your age? I think mine was a 386. It was this really slow piece of thing that I thought was amazing at the time, and you could play games with it and type. And now this thing here, and there was a huge box that made a lot of noise. This thing here is probably 1,000 times faster, right? So this is kind of what we're seeing here, but it's happening in the space of months rather than the space of decades as previous. So the business implications here are massive. So let me highlight here the 7 key drivers that most analysts are completely overlooking. And again, you might want to write notes of these because you might not be able to remember all this information. First, this token economy I mentioned. It's a structural growth driver that ensures sustained demand for Nvidia's products, regardless of what's happening in the economy. And then second, synthetic data generation is an essential and game changer here. And the ability to create infinite training data just massively reduces costs for both AI training models, robotics companies, making Nvidia solutions absolutely indispensable. Why would you want to build a robot without the synthetic data? Well, you could do it in the real world. That'd be really hard, right? You have to actually physically create everything that could possibly happen to a robot. That's really hard. And then third, from a tech perspective, Blackwell's efficiency and scalability dramatically reduce costs for customers. Therefore, it accelerates adoption. That 40x performance improvement isn't just a technical achievement, it's a business mode, and it does it using less electricity. And then fourth, we've got Agentic AI, which is opening an entirely new market in industries like healthcare, finance, and robotics, where reasoning capabilities are critical. It expands Nvidia's total addressable market significantly. And then fifth, by integrating Omniverse, Cosmos, Newton, Nvidia is creating this comprehensive robotics development ecosystem that drives adoption and again, revenue across different product lines. And number 6, this is particularly important. They're democratizing AI by offering affordable, high-performance AI workstations. And this expands their reach to smaller companies, individual developers, creating an entirely new revenue stream. And then 7th, are many overlooked, the less exciting prospects revealed at GTC, such as their networking products Spectrum X. Nvidia has demonstrated a clear, literally full-stack tech roadmap. And it helps solidify customer confidence and encourages long-term investment in Nvidia's ecosystem because customers know, I can get the full freaking solution from Nvidia and it's all going to work. It's all going to be compatible. It's going to be brilliant. Now, would you agree that understanding these 7 tech inflection points before the mainstream knows about them could be crucial for capitalizing on this investment opportunity? Right? Yes or no in the comments down below. Because that's precisely what separates the investor who generates exceptional returns from those who merely buy the index. Now, with those fundamentals in mind, let's look at the current charts for AMD and Nvidia, and I also want to show you the secret trades that Wall Streets are doing. So we're going to kick it off here with AMD, and I know I was giving you a warning on AMD, but let's have a look at what the stock charts say. So the stock's obviously sold off tremendously from its peak here. Let me get the peak into view. So we're down at the moment about 49%, right? Didn't I not say 35% earlier? I guess in the last year. Yeah, okay. That was slightly more than a year ago. 261 bars is about 40 extra trading days in a year. So is this that we're seeing down here now, is that the breakout of all breakouts? Is that the moment where we all go, oh my God, buy it, buy it, buy it, as some people are screaming on social media? Well, what are the positives? Well, we have a nice rally up, right? That yellow line there is the 50-day moving average line. And that's positive. We're above it, right? So we're above it now. That's kind of good. But have a look at our analysis, because we actually give you live analysis in Trade Vision, which is what the software is that I'm looking at here, which is a software that we build. I never shill other people's stuff because I want to make sure it's actually brilliant and super, super high value for you. And it gives us here some technical indicator alert. It says a death cross appeared on March 20th, with the 50-day moving average crossing below the 200-day moving average, sparking concerns about possible downward pressure. So let's have a look at that. We click down here on the moving average lines, and we select the 200 and zoom out a little bit, and we're like, oh, yes, that wasn't good. That wasn't good, right? That was pretty bad. What about, yeah, we're below all the moving average lines. So this is definitely not pretty. So that was a while back, and that was a pretty good sell-off signal, right? So what is that saying to us? Well, there are a few problems with the rally thesis. One is that we've had plenty of these attempts in the past. Right? We did this one here, we did that one here, we did this one here, smaller ones along the way, and then this one here, which now doesn't look particularly exciting compared to the ones that we're seeing over here, right? Which all failed. Secondly, and let me zoom in a little bit for you here. Do you see volume bars down here? In a real rally, what happens? Volume spikes. Has it done that? No, let me show you a real rally. Let's go back a little bit in time here, and I'll show you a real rally. And yeah, here, for example, here you had one where we were coming down, right? Bit of a failed attempt of a breakout, come back down, and then again here, and then this here was the real breakout. And look at the volume. Volume was flat, and then volume exploded, right? That's kind of what you want to see. What does it mean when volume explodes? It means institutions are buying. Right now, they're not buying. And if you don't believe me on that score, there are two other indicators I can show you. One is the stock oversold? So I've got RSI open down here, which says is it oversold? Now, it was oversold down here at 30, and that was sort of the bottom. But it also did that here, right? And that was that bottom, and then we got a little bit of a rally up, and then we came back down. This time, we got a more significant rally up, but we're now at 60-something around our RSIs. If I look at last times we were at these sort of levels, well, what actually happened? These were actually tops. These were not continued rallies. So that's not looking particularly wonderful. And then I told you I'd show you what Wall Street's actually doing, the big guys. Well, we have a feature in here which you can see here on the right, and it's called dark pool. And there you can see the private big trades of Wall Street, the big hedge funds, the big investors, the big investment banks, and they do that in dark pools, which is basically a private stock exchange. Doesn't show up on our data live, and we've got access to that. How do we have access to that? Well, we pay about, a small fortune for access to this data. Like, when I was in banking, I think we've spent probably 5, maybe 6 figures a year on my data, probably 100K plus. So that obviously isn't available to most people. So what we do is we spend that money now, and then we take that and we divide it by the sort of 10,000 people or so who use Trade Vision, and therefore it makes it just about valuable once we paid our development team. So what do you see in the last couple of hours here, or the last day here? Just look at the sentiment. Bearish, 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 bearish. There's one ball, but bearish, bearish, bearish. There's another ball. So it's 90% bearish, the sentiment, right? So institutions ain't buying AMD. So therefore should you? Well, leave that up to you. Let's have a look at Nvidia then, and I'll tell you what I think about that one. So what are you seeing here? Well, the last time we got really excited about Nvidia was a pretty long time ago. It was in May last year. We got a breakout here at around $100. Okay, and then we continued to rally up to about $140, and the exit was at about $130. So you made 30% plus 30% in 20 days or something like that. That's very much a win, right? So that was a good call. And then what's happened after this? Well, we've just sort of, that's pretty much what we've done. We haven't really done anything at all. So it's trading at the same levels now at $120 we were trading at in May 2024, right? So the good thing with that is that fundamentally the stock's gotten a lot cheaper because, oh boy, has their revenue and their profits improved over the last year. So you got to ask yourself though now, is this the moment to buy it? And what am I seeing? Well, I'm seeing that nice little recovery here, right? But as we recover, as we go higher, have a look at volume again. Right? Is that institutions buying Nvidia hand over fist, or is that institutions going, I think we'll wait? Why would they wait? Because they want to see a clear turnaround case for semiconductors. And they probably want to see what Trump's going to say on the 2nd of April. So while I would prefer to buy Nvidia over AMD, because technically both are not perfect from a chart point of view, Nvidia is the proven market leader, AMD is the hopium. I would still prefer to wait until we clearly break out above this 50-day moving average line here, that yellow line there, take out the resistance at 130, and until we see some freaking volume coming in here. And also, and again, I haven't looked at this yet, but I'll tell you what it says. Let's have a look at the dark pool for Nvidia. So I just delete the AMD ticker there that I'd saved, and I write in Nvidia. So it shows it to you for like all major stocks. And in the last a couple of hours here, and it'll show you that by the minute if you're like logged in live when the market's actually open. We have pretty much only bearish trades. There is one bullish trade here. Selling puts. Maybe they're taking profits. Maybe it's genuinely bullish, but you got to see where people are voting, right? It's almost all bearish. So what that's saying to me is that the market, and I mean by Wall Street, I mean the big guys, have not shifted yet. They have not changed their tune on this yet. So yes, I think it is an opportunity, but it is about timing the opportunity. Being too early could mean, well, maybe you thought AMD was a brilliant opportunity, somewhere here. And a year later, you're still a bag holder and you're down 40%. So what's the problem with that? Well, you could have put that money into something else that would have gone up, and then you could have sold it right now, and then you'd have money, cash. I'm sitting on a lot of cash right now because of our rules. Like a lot of my trades got closed, a lot of my investments got closed automatically, and therefore I get cash, and they sold at higher levels somewhere at right now, and it means that I can take that cash and I can reinvest it when the market genuinely starts to rebound and rally. And that could be today, it could be tomorrow, it could be next week, and the only way we know that is by looking at the chart and by having very, very clear defined rules that mean we don't become these bag holders here. Because I can tell you, the AMD investors, they're not having much fun, right? Some of them said buy here or buy there or buy here, or this is really low and this is getting cheaper. The one thing I learned from my mentors who were trading on Wall Street for like 20, 30, 40 years before me, and they basically said, if it's cheap, they can get a lot cheaper. So don't buy something because it's cheap. Buy something because you see the momentum. Buy something because Wall Street's buying it and the momentum is pushing you up. That's how we make a lot of money, right? So you want to be buying, if you look at the last rally, you want to be buying somewhere here, like a little bit after the breakout, that's somewhere there where the volume spikes. And then you want to sell this thing before it starts to collapse, which would have been about here. So you would have gone from there to here, which was pretty good. Give you a percentage. That was a 60% rally. Now, yes, I know it went higher, but you'll never lock in the ultimate 100% rally. Never possible. If you want to do that, forget about it. It's never going to happen. You're going to lose all your money and you're going to come crying. So what you want to learn is just like simply the two rules. It's entry and it's exit, and then how you automate that. And once you manage that, you'll be in a completely different league to 99% of people. And it's way simpler than you think. And all you got to do is go watch that masterclass I put down below for you, felixprehn.org/get free. It's the first link in the description. So if you're going to go and actually learn that, get free, enjoy your life, retire, and do the things you want to do with yourself, write free in the chats down below in the comments, and I'll see that you're doing it. And I wish you tremendous success. All the best. Felix and Winston here. In the next few minutes, you'll learn how Trump's tariff comments are about to flip the market and why our 4 feature tech stocks are perfectly positioned for what comes next. For those short on time, here is the essence. Trump's surprising shift towards a more flexible tariff approach creates a unique opportunity for Palantir